Hello and a warm welcome to this ICAS On Demand webinar. I'm Justine Ricomany. I head up the Employment and Devolved Taxes Policy area at ICAS, and I'm pleased to be hosting this webinar today. I'm delighted to be joined by Phil Staton, who is a Senior Policy Officer at HMRC. Phil's going to talk to us about the consultation which was issued by HMRC on Tax Administration and Maintenance Day on the 27th of April, which focuses on off-payroll working and how HMRC proposed to tackle the current issues relating to a double taxation anomaly which arises in some situations. Phil and his team are asking for feedback on how best this could be done, and makes a proposal as to how offsetting might work to resolve the anomaly. I would encourage you to share this webinar with your clients and contacts and use it as a tool to aid discussions and generate the much needed feedback for HMRC. As the co-chair of the Employment Status and Intermediaries Forum, I welcome this consultation. The forum has been working on a solution for about 3 years now, and in common with so many other tax developments, we've been hampered by events such as Brexit, COVID, and changes at the top of the UK government. This presentation should help you to assist your clients and enable you to pass on to them a comprehensive understanding of what the proposals HMRC are consulting on mean for them if they are involved in contracting through a limited company or involved in any form of off-payroll working. So without further ado, it's over to Phil.
Brilliant. Thanks very much, Justine. So as Justine said, I'm just going to run through what the consultation is looking at and hopefully provide you with some helpful detail on the proposal that the government and HMRC are considering. But first off, I wanted just to recap on what the off-payroll working rules are. So these rules were first introduced back in 2000 and are often referred to as IR35 after the press release number which announced the new legislation. So the aim of those rules is to ensure that individuals who are working like employees pay broadly the same amount of tax and NICs, regardless of the structure in which they are working through, whether that be through their own limited company, a partnership, or directly engaged with the client. And it's really designed to tackle cases of disguised employment and the subsequent avoidance of the employment taxes that would have been due on the payments had they been treated as employment. So under the original rules back in 2000, it was the workers' intermediary, so their personal service company, that was responsible for determining whether the rules applied and paying any tax and NICs to HMRC. Then in 2017, we reformed those rules in the public sector, and then those reforms were further extended to medium and large size clients in the private and voluntary sectors in 2021. And under these reformed rules, the responsibility for determining the status of the worker shifted from the worker's intermediary to the clients receiving their services. So in terms of the tax treatment under the off-payroll working rules, if the worker is determined to be employed for tax purposes, commonly referred to as inside the rules, PAYE is operated on the payment to the worker's intermediary, with income tax and employee NICs deducted from the gross payment, and employer NICs and any apprenticeship levy, if applicable, being paid by the deemed employer on top of this. If the worker is determined to be self-employed for tax purposes or outside the rules, the payments are made gross to the worker's PSC, and then the PSC will be subject to corporation tax on their taxable profits, and the worker will be subject to income tax and NICs on any salary that they receive from their intermediary, and tax will be paid on any dividends received as well from their PSC. So what is the issue that HMRC is actually trying to resolve here? But as Justine mentioned earlier, it's all to do with a potential double taxation issue on the income received from an off-payroll engagement when error is made. So this may occur in a situation where the client is found to have incorrectly determined their worker as outside the off-payroll working rules, when in fact they should have been categorised as inside the rules and treated as a deemed employee. In this case, PAYE should have been operated on the payment at the time that it was made, and therefore the deemed employer is now liable to pay the full amount of income tax and NICs that should have been paid had the correct determination been made originally. However, as the engagement was originally treated as outside the rules, the PSC may have already paid corporation tax on this income, and the worker may also have already paid income tax and NICs on any salary that they've received, and also dividends received out of the same income. And what this means is that HMRC may actually end up collecting more tax overall than is due on the off-payroll working income without any further action or intervention. But just to take you through a very basic example to demonstrate this point, we've got a basic labour supply chain here with a worker providing their services to a client through their PSC. In this example, the client has determined that the engagement is outside the rules, and so the worker's PSC is paid gross, with a fee in this example being £50,000. Now, assuming that the worker is looking to minimise their tax liability, we're assuming that they will pay themselves a salary up to the NIC's primary threshold, and then pay the rest as a dividend out of their retained profits. So for simplicity, we are assuming that there are no other expenses or anything like that in this scenario, just to make the calculations easier to kind of demonstrate and talk through. So in this situation, because they're outside the rules, the PSC will be subject to corporation tax, and in this example, will end up paying £7,160 on their taxable profits. The worker will pay income tax of £2,439 on the dividends that they've received, but they won't actually have paid any income tax on the salary because that's below the personal allowance, and there won't be any employee national insurance contributions either because the salary is not above the primary threshold. The PSC will pay a small amount of employer NICs, though, as it is above the secondary threshold in this case. Now, if HMRC later inquires into that determination and finds that it is incorrect, then the client now owes the income tax and NICs that's due under PAYE. So this means that the client must pay tax and NICs totaling £23,256. Now, what this means is, as a result, HMRC will have collected an additional £10,003 of tax and NICs on the engagement and the income overall. And this is something that we're now kind of looking to address. So what is it that HMRC is actually doing to address this? Now, under the current legislation, there is no set-off mechanism that allows HMRC to account for any tax and NICs that's already been paid by the worker and the intermediary for off-payroll working engagements. Instead, the worker and their PSC may be able to claim a refund for overpayments of tax and NICs that they have made. And where this is the case, HMRC currently has a process in place to notify those who have been recategorised and may be entitled to a refund. But we can actually only do this in cases where we have the contact information available to us in order to write out to them. Now, where this happens, we do recognise that this would result in the worker and PSC effectively bearing none of the cost of their tax liability, with all of that cost actually being borne by the deemed employer. So alongside this process that we've put in place, we have been working closely with a group of key external stakeholders, of which ICAS is one of them, to explore whether we could find a legislative solution that would address the issue more effectively. So as part of this work to explore a legislative solution, we set out 8 key objectives that we felt any solution should try to meet. So firstly, a solution should still incentivise compliance and incentivise clients to get their determinations correct in the first place, and should not be then giving clients an economic advantage from getting their determinations wrong. Any solution should also be able to rely on information that is either available to HMRC already or can be provided to HMRC by a client or deemed employer, and should share the tax burden more equitably between the deemed employer and the worker and PSC. It should also ensure that HMRC does not collect more tax than it needs to effectively enforce the rules. and also not be too difficult to implement in practice. Furthermore, we want to make sure that we are minimising the admin burdens on all parties where an error has been made and in kind of the process of correcting those errors. And finally, any solution should still ensure that there's kind of cooperation between HMRC and its customers, both kind of in compliance checks and just generally in any interactions with HMRC. Now, whilst we have set out these as our kind of key objectives, we do recognise that a solution may not achieve all of these objectives, and there may need to be some compromise required in some areas in order to find a solution that actually works both practically and legislatively. But those are the things that we want to kind of focus on and make sure that we are at least kind of aiming to deliver on those. So what is the legislative change that we're actually considering here? For those of you that are familiar with the PAYE regulations, a mechanism does exist at Regulation 72F that allows HMRC to make a direction to set off taxes that have already been paid through self-assessment by workers for direct engagements. So this mechanism is used in cases where a worker has been incorrectly categorised as self-employed, but is actually a direct employee of the client. But that mechanism can't actually be applied to off-payroll working cases, primarily because of the insertion of the PSC in that structure, which causes difficulties in being able to actually apply this. But what we are considering is actually introducing a similar type of mechanism to this for off-payroll working purposes. And this mechanism would then allow HMRC to make a direction to set the taxes and NICs that's already been paid by a worker and their PSC against the PAYE liability of the deemed employer. The worker and PSC wouldn't be paying any further tax as a result of this, but what would happen is they would be prevented from claiming any refund on the amount that has been used to set off against the deemed employer's tax liability. So the mechanism that we would use is to issue a direction notice to each party, informing them that a set-off has been given and what that means to each of the parties. And like with Reg 72F, a worker and the PSC would be able to appeal against that direction if they believe that it was incorrect, and they would have a 30-day window in which to notify us of that appeal. However, the deemed employer would not be able to appeal that notice. Instead, if they disagreed with the liability, then they would have to appeal against the actual PAYE assessment itself rather than the set-off that we would be giving. So one of the key challenges that HMRC has faced with this issue is actually establishing the amount of tax that's already been paid by the worker and their PSC. And this is difficult because there are a number of factors that can affect the worker and the PSC's tax affairs, such as having numerous engagements, the PSC having other shareholders or employees, and ultimately as well, how the worker chooses to be remunerated by their PSC will all have an impact. And that all contributes to making it very challenging for HMRC to calculate how much tax has actually been paid in respect of the recategorised off-payroll working income. So what we've been looking at to overcome this is actually considering a more pragmatic approach, whereby we will look to estimate the amount of tax and NICs that has already been paid by the worker and PSC. And this estimation approach would be based on assumptions and best judgments, really, about the workers and the PSC's tax arrangements, as well as exploring whether historic tax data that we have on off-payroll workers can be used to help determine the typical patterns of remuneration and tax payments that off-payroll workers would normally pay, to help inform that whole kind of methodology for an estimate and to get us kind of as close as possible to that kind of right amount of tax. And a key driver behind this approach as well is actually to avoid the need for HMRC to have to request further information from the worker and the PSC on their tax affairs in order for us to establish what the actual tax that's been paid is, which in turn would help to reduce any administrative burdens and the time that it would take to actually work through a compliance check and actually conclude that check.
Bill, can I ask you a
Yes.
question? In terms of the estimation process, I can see how that would save employers and the PSCs from having to do additional work. If that process is gone through, is there a window for discussion with HMRC between all the parties, just to make sure those figures are agreeable to everyone and fair?
Yeah, so what we would be looking to do is make sure that our methodology is set out in our guidance, and we will explain that methodology when we are in discussions with the deemed employer. We probably wouldn't be in discussion with the individual worker and PSC as part of the inquiry, but if they felt that the kind of set off was actually incorrect, or kind of challenged the amount, then they would have an opportunity through the grounds of appeal against the notice to challenge that, and we would then work through that with them as part of the appeals process to then arrive at what is then deemed to be a more kind of correct or accurate figure, and that would then feed into the kind of final calculation and the kind of net liability that then the deemed employer would have.
Okay, thank you.
So to move on then to what will be covered by this set-off mechanism, for legislative purposes, we need to separate out the direct taxes from the national insurance contributions. So for the income tax liability of the deemed employer, we would consider then allowing a set-off for the corporation tax that's been paid by the PSC, the income tax paid on any salary, and any tax that's been paid on the dividends in relation to the same off-payroll working income. And then on the national insurance side, only the employee national insurance contributors liability can be eligible for a set-off. And this can be set off against any employee NICs that's been paid on the salary, or any class 2 or class 4 NICs that's been paid if the worker is actually working through a partnership and is a partner in that partnership. So what wouldn't be covered, as alluded to in the previous slide, is any amounts of employer NICs that are due by the deemed employer. And also we wouldn't be bringing into scope the apprenticeship levy either. And this is because these liabilities are actually liabilities that are attached to the employer, and therefore the deemed employer should be the one bearing the full burden of those costs, rather than being able to seek a set off against any other payments that have been made by a different employer. The legislative solution would also not take into account any employer NICs that's been paid by the intermediary, or class 3 NICs that's been paid by the worker. And if any payments have been made, a refund would need to be requested for those amounts by those parties instead. And in addition, any income tax or NICs that's been paid by other employees, directors, partners, or shareholders would not be included. And this is because those tax and NICs payments would not be directly related to the services provided by the worker to the client, and therefore could not be brought into scope of this set-off mechanism. And finally, it's also worth just flagging that a set-off also would not reduce the amount of any penalty that, or sorry, the amount that any penalty would be calculated on. It would still be calculated based on the gross liability, because that is ultimately the tax at stake for the error that's been made, even if it is then ultimately being then reduced by tax that's been paid elsewhere. So I just wanted to flag that as well, that it shouldn't have any impact on the penalty calculation. So just to then again take you through quite a simple example of how this would work. So taking just the same supply chain as I had for the first example, and the same payment arrangements. As I set out in the example before, the client owes a total of £23,256 under PAYE for the incorrect status determination. However, with this mechanism, we can now consider the corporation tax that would have been paid by the PSC, as well as the income tax that's been paid by the worker on the same income. And the legislative solution would then allow us to set off those amounts of tax against the income tax liability of the deemed employer. Therefore, we can reduce the income tax liability of the deemed employer by £9,599, leaving only £2,861 remaining as the income tax liability. In this example, because we didn't actually have any employee NICs paid and employer NICs is not in scope of the set-off, the amounts of employee NICs and employer NICs that the deemed employer owes is going to remain unchanged in this example. But overall, the kind of set-off mechanism would reduce the deemed employer's liability from 22,256 to 13,657. So moving on then to what information HMRC would need to kind of facilitate this this set-off. Again, this has been another one of the key challenges that we've had about ensuring that we have the right information on the workers and their intermediaries in order to identify their tax records on our systems. Put simply, if we don't have enough information to find their records, we will not be able to give a set-off. And this is because we will need to check that a tax return has been submitted for the relevant periods, tax has been paid, and be able to then issue direction notices and update tax records to reflect that a set-off has been given, and make sure we've got kind of those assurance checks in place for that whole process. And without knowing who they are or being able to identify their records, we were just not able to do any of that. Therefore, to facilitate the whole set-off mechanism, we will need a certain amount of information from the client or deemed employer regarding the worker and their intermediary. So this may include the worker's name and address, their date of birth, their national insurance number, the intermediary's name and address, and the intermediary's VAT registration number or company registration number. And these types of information will enable HMRC to identify the tax records more easily, and the more information we can obtain, the easier it is to do that, and the quicker it is for us to facilitate a set-off process and check the records and do our assurance checks. However, whilst we need this information, we are not intending to actually legislate for this information to be provided to us. We consider this to more be kind of good practice for clients to gather this as part of their hiring practices, and with the added incentive that should you make a mistake with your status determinations, then you would potentially be eligible for the set-off to reduce any subsequent tax liability, or not be prevented from getting that set-off because you've not collected the information that HMRC would then subsequently need. So looking then when we would look to apply this from, in terms of the commencement and application of a legislative solution, the intention is that if we did proceed with legislation, we would want this to come into force from the 6th of April 2024, so from the start of next tax year. And how we would apply it, we would give a set-off against any PAYE liabilities that are assessed as a result of an off-payroll working error on or after the 6th of April 2024. But that liability can be in relation to deemed direct payments that have been made as far back as the 6th of April 2017, so when the public sector reform was first introduced. And by assessed, what we mean is the date on which we have issued an assessment or determination with the PAYE liability, or where we've had a letter of offer that agrees to that PAYE liability. The legislative solution would not apply, though, to any compliance checks that have already been settled before 6th of April 2024, whether that be through a contract settlement, or if we have issued a determination or assessment via, say, a Regulation 80 determination before the 6th of April, those would not then be in scope or eligible for a set-off. So in terms then of the impacts of this this proposal, we don't actually anticipate that by providing this set-off mechanism that there would be any significant impacts on the labour market. The key aim of this proposal is to ensure that HMRC collects the right amount of tax in cases of non-compliance, but it shouldn't necessarily change the practices that already should be in place for undertaking status determinations and engaging off-payroll workers. However, we do anticipate that there will be some new administrative burdens as a result of this legislation. As I've already kind of said, for clients and deemed employers, this will come in the form of gathering the necessary information to facilitate the set-off, although some of this information may actually already be gathered as part of hiring practices, but some clients may need to start gathering more information than they currently do. And then for HMRC, there will also be new administrative burdens around calculating the set-off, processing data, issuing notices, handling appeals, and updating tax records. So I guess, why has HMRC launched this consultation into this proposal? And put simply, this is a complex area of the tax system and an area that garners quite a significant interest from a range of parties in the labour supply chain. And what we really want to do is ensure that what we are proposing as a potential legislative change will work effectively at tackling the issue of over-collecting tax, and that we're not kind of missing anything, and that everyone kind of fully understands what this legislative mechanism would do. So we are really keen to hear views from you on whether the scope and application of the proposal is appropriate, and if there are any gaps or adverse consequences, or even kind of just other scenarios that we have not yet considered as part of this. We also want to hear views on whether the grounds of appeal against a direction notice provides sufficient safeguards for all parties where there is a disagreement. We want to understand if there are any issues or concerns about the information that HMRC would require to facilitate a set-off. Is it information that is already collected, or if not, is it information that can easily be gathered, or would it be difficult? And we would like to understand that further. And also we want to ensure that we've identified and understood any other impacts. So whilst I say that we don't anticipate there being any significant impacts, we want to make sure that that is the case and that we haven't missed anything with this. And also to make sure we understand the level of administrative burden that this will place on businesses. And if we can, try and understand the actual quantum of that administrative burden, if there is going to be any additional burdens then and additional costs. So we'd really like to kind of hear from you on those aspects of the consultation, and make sure that we do actually have a proposal that would work effectively and be practically implemented once it does come in. So I would certainly encourage you to read the consultation and to contribute to it. And you can either get in touch by contacting Justine and feeding into ICAS's wider response on this, or you can actually respond to HMRC directly, either by email or post. And the details of how you can do that are on the slide, and they're also contained in the consultation document itself, which you can find on gov.uk. So finally, from me, I was just going to touch on what happens next with this work. So the consultation is open until the 22nd of June, after which point we will be reviewing the responses that we received and considering any issues and feedback and concerns that may arise from those responses. And all of this will then inform the decision-making process on whether it is right for us to take forward this legislative solution and how we do that. and we will be publishing a summary of responses to the consultation later in the year, likely to be in the autumn, which will then set out how the government plans to proceed with this issue and with this proposal. So I think that was really everything that I was wanting to cover. So Justine, I'm happy to kind of hand back to you if you've got any further questions for me. Then I'll open up to you.
Thank you, Phil. I don't have any more questions for you actually at the moment, because I think that what I'd like to see is members, and when anybody else who sees this webinar on social media, who's involved in the off-working space, actually providing you with as much feedback as they all possibly can on this. I mean, I think given the legislation that we have to work with, I think that a lot of thought and a lot of consideration and good stakeholder input has been put into this consultation process. And I'm really glad to see that it's happening, because, as you know, I've been whinging about it for quite a while. So it's a good thing in my view. And I think that if we can get substantial amounts of responses from the stakeholders involved and the wider public, perhaps, then that would be really, really good. So that's a plea from me. So I guess, Phil, it just remains for me to thank you again for taking the time to present this invaluable information to our members and beyond. And I hope that you receive a lot of responses to this consultation, given the amount of work that we've all put into it, but you guys especially. So I'll just go on to the further information slide that we've got. I think, have we got another slide, Phil? Yes, there it is. So if we have a look at that, basically, please remember that you can keep up to date with all the latest tax and other professional news, including the latest information, guides and resources on icas.com. And you can access technical support through the ICAS Technical Help Desk, available through the Contact Us section of our website, which covers audit and accounting, tax, practice support, AML and ethics. So thank you, Phil, once again, and of course to you, the audience, for watching this ICAS webinar. Until next time, goodbye.